Welcome back to Morning Trade Live. We've got the Russell leading the charge in the day two FOMC rally. Some mega caps left behind. Not Tesla, though. Apple's also making a high, but Tesla's the clear winner. Up 3.5% this morning so far, trading more like some of the beaten down smaller caps, strangely enough. Let's bring in Gary Black, joining us from the Future Fund. He's managing partner, Tesla Bull and Fed Dove. And you certainly got that second part right. Gary, welcome back. Tell me what you think about the Fed's policy and how it informs your strategy.
So we think the Fed, clearly signaled that inflation is dead, and that they will start cutting rates, probably March. I think now that 80% chance. And obviously, as rates come down, we're at what, 3.95 on the 10-year today. That helps long duration growth stocks like Tesla because the future earnings are being discounted at a lower rate. So we like that. The reason we like Tesla here, and there's a bunch, but one is we think auto gross margins are bottoming. Even though you've seen some inventory discounts, you haven't seen any more configurator discounts, as we talked about, where they actually cut the price when you build something new. You got the Cybertruck, the halo effect. So when people see the Cybertruck in the store, they walk in, they can't get it, they order a Model 3 or they order a Model Y. We saw that back in 2021 when the Model Y came out. You had a huge halo effect for the whole franchise. And then you got the EV credit, which goes off invoice in about 2 weeks. That'll apply to the Model Y. You don't have to wait for the tax anymore. And it'll apply to the Model 3 Performance, but not the Model 3 rear-wheel drive or the long range, because the batteries are sourced out of China. And then the last thing is you got is the $25,000 vehicle. They've been talking about that coming in 2025. My guess is they're gearing up for that. They're not going to announce it before it's ready because you don't want to cannibalize the Model 3. But I think that's going to come late in 2024, at least first produce. And that's going to be huge because you're going to basically go after that, mass segment that Tesla has always coveted. And that'll be, that's where you're going to get 5 million EVs by 2030 is that $25,000 car. So we like Tesla here. It still looks cheap. The way we look at cheapness, we look at price earnings relative to growth, which is the way you should be looking at stuff. And on a price earnings basis, it's trading about 58 times 2024. But it's growing at 35% a year. So you compare it to an Apple or you compare it to a Microsoft, it looks cheaper than those. So we still like Tesla here.
Well, that's one of the main things I wanted to get your take on, kind of connecting, because I do want to get into some more of the details on Tesla's pricing and the strategy and the Cybertruck and stuff too. But to connect that macro into Tesla for a moment, the valuations compared to the mega caps, or the performance rather, is what stands out to me. Whereas Tesla, like this morning, as an example, it trades more like some of these interest rate dependent smaller caps in a way than it does the mega caps, with so many of those giants at records all-time highs. Tesla, of course, is nowhere close to its $415 high from back in late 21. What do you make of the way the market seems to categorize it in that way, Gary? Like, does Tesla really need like an injection of liquidity into the economy?
Well, I think it does in the sense that if you've got lower interest rates, that means you've got lower loan payments. And just like, the home builders, when your loan payments go down and a car is a $50,000 purchase. So if your loan payment's $1,000 a month and now it's going to be $900 a month, you're going to have more demand. And it's something Elon's talked a lot about on the conference calls. He has said that because interest rates were going up, they had to cut their prices to keep loan payments the same. Now, I'm not sure that was the right strategy. You could have just brought down the loan payments as a manufacturer, but Tesla didn't do that. But now where you've got interest rates going down, you have much less risk that you're going to have Elon cut price again, just as he's done all year. So if you look at earnings estimates for Tesla, they're down 40% year to date if you look at either 23 or 24 because they've cut the price of Tesla. Now you got everything going the other way. You got interest rates going down, so there's much less risk that you're going to have further price cuts. When we get into the end of the year, you got all these distortions though now, because again, as I talked about, the Model 3, the rear wheel drive in the long range, which is 90% of the volume, is not going to have the $7,500 credit up, but the Model Y, which is priced about $5,000 or $6,000 more, will. So you're going to have these weird situation where after that $7,500 off invoice credit, the Model Y is going to be cheaper than the Model 3. My guess is they'll take the Model Y price up rather than cut Model 3 more. But that's 2 weeks from now. But that'll be
Okay.
good for the stock.
So then, we should then, I guess, expect the prices to stabilize somewhat. Like the string of cuts we went through, if things play out the way the macro is geared up for right now, then we shouldn't have to see any more price cuts, right? Unless they really need to undercut the competition or something.
Which they don't. I mean, if you
Doesn't
can
seem like
buy
it.
a Model 3 today for 35,000, you can buy a Model Y for 45,000. If you ask why people don't, if you ask people who are, internal combustion engine owners, why they don't buy Tesla, the number one reason is because they think it costs too much. Okay. And if Tesla would just even spend a little bit of money communicating with folks that, hey, after this EV credit, you can get into a Model 3 for 30,000 bucks. You can get into a Model Y for under $40,000. That would be a surprise to a lot of people. So we've advocated they should spend some money on advertising for a long time. I don't see them cutting price from here. Their margins right now are 16. That's the industry average. They were 26 a year ago. And so I would argue the pricing is fine. That's not the reason. The way Tesla can get from 1,000,008 units this year to our forecast is 10 million by 2030 is by communicating with people how affordable it is, how easy it is to charge, how easy it is, the lower cost because you don't have to put gas in your car, the safety record. If you drive a Tesla at 0 to 60 in 3 seconds, the performance is huge. All they need to do is communicate those benefits to ICE owners, and you're going to get a lot more sales. You don't need to cut price anymore.
Okay, now for the Cybertruck, a little bit of a different story, right? I mean, this is one you got to kind of break the bank a little bit more if you want all the gadgets and cross your T's and dot your I's and get your trunk full, the bed full of extra, charging plates, etc., so you can get out into the great outdoors. What do you think of this thing? Are they going to be able to find a buyer for it?
They have 2 million buyers. They have people lining up. Like I live here in
Well, they've
Chicago.
got little deposits, right? They have,
Yeah, but I live here in Chicago. They have a Tesla Cybertruck in the store. There are
yeah.
lines around the block to see this thing. It's just out of this world. So they're not going to have any problem whatsoever selling this, despite what the bears say. And they're charging $20,000 more for somebody who wants to take delivery today. And you get some etching and you get FSD for that 20,000 bucks. But you've got this 2 million order backlog of people who want to get their people are not canceling their orders. People are trying to figure out how do I get my Cybertruck before 2025. And so I think the pricing is fine. I think the long range, which is kind of their bread and butter version, that's going to be $80,000 to start. The tri-motor, the beast as they call it, is going to be $100,000. They're going to have a rear wheel drive version kind of for the average truck driver, pickup truck owner. It's going to start at around $60,000. Those numbers are going to come down over time, but for now they're skimming. They're basically, that's a marketing term where you're basically starting with the people who want to pay for it, want to get it first, and then they'll bring the prices down as they get more scale and they produce this thing. Right now they're telling people 250,000 capacity by 2025. I could see this thing selling 1 million units by say 2026, 2027. And I could see this thing with a smaller version for especially Asia. You don't see pickup trucks in Europe, but you see pickup trucks in Asia. I could see them coming out with a Cybertruck 2 that's a lot smaller, but has the same look as the Cybertruck 1. So I think this is going to become, as big a seller as Model Y. Model Y is going to sell 1,400,000 or so this year, 1,300,000. I could see Cybertruck being 1 million units per year as we get out to 2026, 2027.
All right. Hey, I feel like they'll pop those sales numbers if they get the matte black one as their main imagery. I've been saying that since day one. Yeah, so I think that one's a little bit more popular. All right, I'm going to go check out the one in Gold Coast.
Yeah, check it out.
Okay, all right. Gary, thanks for the check-in. Appreciate it, sir.
See you, Albert.
All right, thank you. Gary Black, managing partner of the Future of Fun. All right, with the Tesla numbers, looking forward to next year.